The prophecy is coming true. As you may know, I've been very bullish on the dollar recently. I was sat here putting my name on the line back on the 30th of June, pleading my case for a dollar bullish scenario. And so far, it's working out very, very well. But the question is why? Well, there's a couple of reasons. So if we just quickly discuss what happened with the dollar, why did it have such a bad start to the year? We had trade war tensions, we had economic uncertainty, we had Fed rate cut pricing in. There was a lot of negativity around the dollar. Even de-dollarization was, for some reason, a topic within the retail community. I even saw it mentioned in a bank report, which is obviously nonsense. And anyone with half a brain and any understanding of the economy and global economy would have known that de-dollarization is just not going to happen. But back to the point, a lot of these things were priced in and didn't come to fruition. So for example, the Fed rate cuts. We can see here the Fed just held rates at 4.5. And we can see from the forward guidance, Powell didn't sound like he was very dovish at all. In fact, I would say he was more neutral to hawkish. Nothing here suggested that he's wanting to cut in September either. So we can see inflation is above target. The economy is in a solid position. Again, inflation is somewhat above target. Inflation remains somewhat elevated. And this is important. We think we have a long way to go to know where we'll be on impacts, and that's regarding tariffs. So if you just think about what the Fed has been doing and saying a lot recently, it's been we need to see what's going to happen with tariffs. We don't know the impacts of tariffs. So that's led them to being very, very cautious and unsure. And if they still think that they're a long way away from knowing, how would that allow them to cut rates? Well, in my opinion, it wouldn't. So that's one thing. That's one thing that has been good for the dollar. So there's no rate cuts happening as far as we know at the moment. And so far, I'm quite happy to say I do not think they are going to cut rates in September. But having said that, we do have news coming tomorrow that we'll discuss shortly. So let's now have a quick look at the economy of the dollar. So as I said, the Fed sounds quite hawkish in my opinion. But what's the data telling us? Well, at a quick glance, it looks very, very strong. So let's see, interest rates held higher for longer. CPI has popped up. Inflation higher generally doesn't lead to rate cuts. So we can see it was 2.4, then came down to 2.3, then it went up to 2.4, now it's currently at 2.7. Unemployment rate remains very, very stable. It's just hanging around this 4.1 to 4.2 range. GDP was very bad at negative 0.3, negative 0.2, and then it came down to negative 0.5, and now it's sitting at 3%. So GDP has had a big pop to the upside. Keep in mind those recessionary fears, a lot of that was driven by this triple negative GDP release. Consumer sentiment has also had a big pop to the upside. It was down at 50.8, it's now sitting at 60.7. Retail sales was also down here at 0.9, it's had an increase to 0.6. Manufacturing PMI is very, very stable. Services PMI did pop up to 50.8. Services is still not great, but it's holding up. It's still relatively stable. So again, the economics, the core data for the dollar doesn't suggest downside. It actually suggests more bullishness in my opinion. So as we can see here on the dollar chart, we can see we are approaching 100, which is not just a big psychological level, it's a big technical level. We can see here on this daily time frame, the dollar has respected 100, give or take, slightly off, slightly there, but it's still a big level to pay attention to. So my opinion, and this is just complete speculation, don't take this for granted or as prophecy, but it wouldn't be a surprise to me if we do see the dollar come down towards 97 to 98 in this zone here, and then start to pick up again, something like this. So then once it breaches 100, we could very easily see 105. But the big question now is, what would drive this dip here? Well, this is the news I was just discussing with you. What news release do we have on the first Friday of every month? Immediately, that should have snapped with you. NFP. Everyone loves a bit of NFP. NFP is it's the second best data release behind FOMC. So here, NFP, average hourly earnings, unemployment rate, and we've got manufacturing PMI. So we could see lower NFP, higher unemployment, and that could lead to a dip on the dollar. I don't have any data to suggest that is going to happen. I actually don't want that to happen. I would love a continuation in high NFP. We already had a very, very good ADP this week, so we will have to see, but this is just a rough idea. If these data points do come in slightly worse, we could definitely see the dollar start to revisit these lows, and in my opinion, this would be a great level to start picking up some dollars on discount. Double D, big D, things like euro dollar shorts, pound dollar shorts, Aussie dollar shorts, New Zealand dollar shorts, dollar yen longs, dollar Swiss longs, dollar CAD longs, dollar long everywhere across the board would be amazing. There are still some bears out there, which I completely respect, but I just don't see it. I cannot see it in the books just yet. And as I always say, my opinion could change. I could sit here next week and say, actually, I don't know about this. I'm not sure. I think I might want to sell the dollar. But that would require some sort of data release. It would require something to happen. As things are right now, at the time I'm recording this video, at 10 minutes to 2 p.m. on a Thursday, 31st of July, the dollar seems like a great buy. This isn't financial advice. This is just my opinion. So please, don't follow just because I said so. Do your own research, as always. So that brings me on to the equities indices market. So what could we expect here? Well, if we're expecting dollar bullishness, we're expecting the Fed to hold rates into September as well, and we get a continuation of positive dollar data, I would love to see the NASDAQ, the S&P, the Dow all start to pull back. That would allow me to accumulate down here at these previous all-time highs, and then we could take it higher. So this would be a very, very typical break of these highs, and then the retest of this level, and then the move up. It's a very bread and butter textbook play. And considering that these markets, generally speaking, haven't had much of a pullback really, other than here, which was very minor, would you even consider that a pullback? The last real pullback was back at the 22nd of April right here. I really do think these markets are due for a pullback, and this could be the catalyst to drive that. So to wrap up, I'm looking at euro dollar shorts, pound dollar shorts. I'm looking to buy NASDAQ on a dip. I'm looking to buy the S&P on a dip. I'm looking at New Zealand dollar shorts, Australian dollar shorts, across the board. Of course, like I said, I could be totally wrong. I will always be adaptive to data, and I will always say when I'm wrong. But so far, I've been very, very right on the dollar. And let me show you how right here, Bank of America. I'm not going to read all of this for you, don't worry. But just to quickly cover the last couple of sentences here. Markets moved on as they increasingly discount headlines until they become undisputable facts. Remember, the markets were moving pretty much just on headlines. Trump would put something on Truth Social, would see a headline by Reuters or Bloomberg, and the dollar would be everywhere. It was a mess. It was a very, very difficult trading experience. But seems, anyway, this was a couple of, like a week or so ago now anyway. But these facts develop, go in line with our view. The US economy will avoid a recession. The Fed will not cut rates this year. But then, Bank of America doubled down a couple of days later. Higher conviction in our Fed call. I've been saying this. This is amazing because I was really putting my name on the line when I was bullish dollar. There was quite a few people really against that idea, and it has worked. I'm very, very happy about that. I'm really proud of the work I did on that. But the job's not done. We could still see the dollar start slumping. It could go 95, 90, 85. Again, I do not think that's going to happen, but it could. We've got to be realistic. Anything can happen in these markets. All it would take is a shift in data, a shift in sentiment. But again, just to quickly explain, the tariffs are pretty much done. We've got a lot of tariff relief now. We've got the Fed holding rates. We've got very strong data for the dollar. And also, the last thing I'm going to leave you with, and I've shown this quite often or quite a lot recently, but let me just get rid of these beautiful arrows. Now, a lot of you will understand and you will know this already, but for those of you that don't, you need to understand about liquidity flows. So when the dollar is doing very poorly, we often see inflows into the next liquid asset, which is the euro. So if we look here, when the dollar peaked, it was around, let's just say 13th of January, give or take. When did the euro down here bottom? Well, it was around the 6th to the 13th, depending on exactly where you look. But you can see these markets are pretty inverse. Now, where did the dollar bottom? Well, it was around the 6th to the 7th of July. What about the euro? Where did that top? Same thing, around the 7th of July. So if we are expecting this to be the bottom of the dollar, or at least, maybe form a double bottom then go higher, we could get an amazing opportunity on euro dollar to go short. So guys, that concludes the video. I hope you took some value, you learned something, or whatever it may be, or if you just like to come here and laugh at me or whatever it may be, I don't care. Thanks for the view. Guys, I'll see you later. Have a great one. Don't get margin called. Stay safe, and I'll speak to you all very, very soon.